Yo, welcome to the first ever Trading Dojo video on YouTube. In this video, we will be recapping the entire week's price action on SPX and SPY. So sit down, relax, enjoy the video. Boom! I'm nice like that. First try. In this video, we what, we who, we where, we why, we wanna be SPY. I hate it here. So on Monday, like I said on the previous Friday, I said play the rally, short end of day, right? Because on Friday we closed right at a major support, which is 42.70. So 2 weeks back or a couple weeks back, I said in the server, I gave all my major supports, which was 43.80, 42.80, and 41.60, right? So obviously when we lose a major support, a major flush happens. And what happens there is we go on to the next major support, okay? What I was thinking originally was play the rally, which was a bounce on Monday at 42.70 all the way to 43.42. Since the market gapped down below 42.70, the next logical answer was to play a bounce at the next range, which was 42.24 to 42.17. The reason why I was still looking for a bounce, even though we dropped a lot in the past week, was because for the past 2 days before Monday, Thursday and Friday, we dropped 100 plus points each day. And what the market typically likes to do is to pull the rug when people are feeling euphoric. So on these 2 days, the euphoria was building up. We were seeing 100, 1,000% plays, 2,000% plays every single day, correct? And what's the best thing for the market to do when everyone's feeling euphoric? Oh, bear market is happening, recession is happening, all the crash is happening. Let's pull the rug on them and make the market bounce, right? And that's exactly what we did on Monday, which is why I said play the rally, short end of day. So on Tuesday, we closed right at 41.85, 41.67, which is the major support that I gave a couple weeks ago after we break 42.80, 42.70, whatever. And then the plan I gave on Tuesday night, I said short the bounce. The reason why is because the market is currently in a downtrend. So every bounce we see, people are going to sell it. The only reason why we're seeing a bounce is because we're at a major support. In the morning, we saw a bounce at major support and we hit the pivot range of 42.24. And what we see at 42.24? We saw a reject. There we played puts. And it went all the way down to 41.60. And then from here, we saw another bounce, which we saw again here at 42.24. And as you can see, we couldn't hold above the pivot range. And as you can see from this trend line from Tuesday night, we started a trend line going up. As you can see, bounce here, bounce here, bounce here, and finally when we broke below this trend line, we flushed back down to 41.85, 41.67. So the market gapped up a little bit on Thursday morning. The reason why the market gapped up Thursday morning is because Facebook earnings had a good reaction to their earnings report. I don't know why. So this is a day that was testing patience, because we're currently in a bear market where the market is dropping, but the market is gapping up due to Facebook's weird earnings. This is where it gets tricky. When gap ups happen, we tend to just sit on hands for the first couple hours, minutes, because when a gap happens, the market usually likes to retrace its move. So here, coming from Tuesday morning's trend, right? we reject right at the open here. Here we have a pattern forming. So we have an inverse head and shoulders. Inverse head and shoulders is obviously bullish. Here we form the left shoulder, and then here we form the head, and then here we reject at 42.24 and create the right shoulder. And once 42.24 broke with this momentum, the inverse head and shoulders played out. And where did it play out to again? It played out to this trend line. Okay? And once we reached this trend line, we chopped up a little bit, and then at the end of the day, we broke down. So Thursday night, I send out a plan and I say, nice run we had today, mostly because of the inverse head and shoulders. The start of it was oddly due to Facebook's ER, but then after hours, it was ruined by Amazon, right? So Amazon's earning was basically a catalyst of what was already happening Thursday night, which was the break of the trend line and the start of the flush. Amazon's earning is what helped the market continue lower. And then in the server, I said, if we see 4,200 again, we will see a big flush. The reason why is because last night, we saw 4,300. There's no reason for us to drop 100 points to 4,200, right? Like, we've seen 4,200 so many times. We saw it here. We saw it here. We saw it all here. We saw it all here. We saw it here. And then we see it again on Friday. We've tested this level so many times, and we failed to hold above it so many times that the next time we were going to flush down, especially with this momentum. So for next week, I'm expecting futures to actually bounce. The reason why is because, remember what I said, once we reach a major support for the first time, I'm expecting a bounce, right? We closed right at 41.27. I wouldn't be surprised if Monday we saw a bounce, or we open at 41.85 and 41.67. If we do that, if we open there, I'm sitting on my hands. If we see a reject here, I'm still sitting on my hands. The reason why is because we can still bounce at 41.27 still, because it's a major support. Major supports take a lot of price action for it to finally break down. So I'm just waiting here. I'm waiting here. I'm waiting here. You can scalp from here to here. You can definitely scalp from here to here. That's 40 points that you can play off of. But what I'm waiting for is reject here, break here. The reason why is because back in February 24th, look, we touched here and we bounced all the way back to 4,300. Now, I'm not expecting the same kind of move. I'm definitely not expecting the same kind of move. And if we do, then damn. But that's one big indication of where you can determine what is a major support. If you see price action bounce, 41.19 to 4,300 in one day, you can tell that this is a major support. And once a major support is breaking down like this, we will see this move again. That's what I'm waiting for. So once this happens, we will see 41.83 to 41.69, 44.70, and then the final gap fill here at 40.20. This is what I'm watching for next week. And for what I'm watching on Monday, I'm expecting a bounce here to maybe 41.85 or 42.24. If we break above 41.85, I don't see us breaking above 42.24 for whatever reason, and then we reject back down. All I see here is if we see a bounce, it'll just be a dead cat because of the current trend that we're in. So that is what I'm watching for on Monday. On Monday, I'd like to see a bounce here to 41.85, and if we break above 41.85, I see 42.24. I do not see us breaking above 42.24, so if we do see this, I'm taking starter and puts, and most likely I'm taking puts for Friday, so that if we do see a dead cat, this reject down to maybe 40.20 can play out all the way till Friday. So that's the major levels we're watching for Monday: 41.20, 41.85, 42.24. And then for the rest of the week, we're watching 41.20, because if we break below that, we flush out. And that's all I'm looking for the next week. And if you want to see more in-depth analysis of what's going on every day in the market, you can join us in Trading Dojo. The link is down below. And if you want to see more videos like this where we recap of the market every weekend, please subscribe, hit the like button, click the bell, whatever, all that stuff. And yeah, that wraps it up for me, guys. Peace! We what, we who, we where, we why, we wanna be SPY.